Friday, we try to identify the new topic, the topical subject, burning issues, and then try to discuss that part by inviting the expert of this area. So the Alternative Investment Fund, that's called AIF, and SME IPO has emerged as powerful tool and engine for growth, because that is both the things are connected to each other, and it is giving a promising result for mid-stage and emerging companies in India. As you are aware, AIF provide structured private capital for expansion, and SME IPO provide structured private capital, and by going to a public, the door of the public for this market. And it's improved governance, long-term sustainability. When you combine both strategically, both channel creates seamless funding pathway from early institutional investment to a successful public listing. So this webinar will deliver into how business can leverage AIF participation to strengthen pre-IPO readiness, enhancing valuation to strengthen pre-IPO preparation, and enhance valuation and create market credibility for the smooth transaction of SME and the company which are going for listing. So today we will discuss various issues on this. Number one, overview of the evolving private and public capital market landscape in India, how AIF support high potential companies ahead of this IPO journey, advantage of combining AIF capital with SME IPO planning, and then preparing for investor due diligence, valuation, and governance upgradation. Criteria for readiness assessment for SME IPO and its eligibility, and how AIF participation enhances credibility and improves IPO subscription response. Structuring capital raising strategy, timing, sequencing, and financial planning. Regulatory consideration and compliance framework for AIF and SME IPO. And case insightful on companies leveraging AIF for IPO preparedness, and role of advisor, fund manager, and promoter in building a successful fundraising roadmap. Now, friends, these are multiple topics of this particular thing we will discuss, and for that we have invited panelists who are in this area of expertise. So first I welcome Manik Vadva. He is a director of SKI Capital Service, both over 8 years of leadership experience in capital market, investment management, and financial advisory. He works actively in SME market and merchant banking field. His background including prior roles in legal and regulatory domain with Nitish Desai, Associate Trilegal, AZB Partner, Shardul Amarchand Mangaldas, and focusing on investment, fund, IPO, due diligence, and corporate law. So his experience on this area and now in the AI area, it will definitely help to understand nitty-gritty, the legal and the market side. I welcome Manik for this program. Then we have Mr. Pramod Maheshwari. He is a founder and CEO of the Career Point Group, headquartered in Kota, Rajasthan, and with a entrepreneurial journey spanning over 32 years. He is icon in himself. He has built diversified venture into education, finance, investment, and agro processing, with vision centered on innovation, quality standard, and sustained value creation. Under his leadership, Career Point EduTech Limited, listed at NSE and BSE, has grown into a respected institution in ecosystem. And friends, the most important part is that today's time when people are making their headquarters in Bombay, Bangalore, Delhi, Gurgaon, he has stationed the headquarters in Kota. It talks about his roots and his giving credibility to the that city which has created value. So you can understand and the way Pramod Maheshwari is doing work in different area. It will definitely help us to understand from both the side, because he has came out with public issue also. He is in financial area. Multiple things will come. Then we have Mr. Saurabh Chaudhary. He's a managing director, Raghunath Capital, category 3 AIF, where he leads the Raghunath Capital Vision Fund, focus on investment across 500 companies using value-driven strategies and long-term growth conviction. His experience span investment management, private equity, and fund operation, with prior roles including senior investment manager at NAV Capital in Dubai and assistant manager at EY. He has worked in this. Saurabh's experience, his knowledge is par excellence. And I came to know today that suddenly he has to rush to Bangalore. So he has told me that he will join for a few minutes. So I requested him, just even if you are from the car, you can do it. This is the advantage of webinar. Then we have Mr. Manoj Kumar, partner head, M&A and investment banking, corporate professional. Manoj is looking after the investment banking and merchant banking and SME IPO and IPO. So his linking, understanding from the AIF market and AIF anchor investor to IPO journey will be very useful. We have Mr. Sanchit, which is a partner head, deals and valuation, corporate professional, founding partner of Makia, Cat 1 AIF. I welcome Sanchit and Manoj. And then we have a Shivanshu Birla, is founding partner in Makia Capital. This is category 1 AIF, and they are investing in various pre-IPO companies. They have a fund which invests money in this, and they have various planning for doing SME IPO also, and various investment opportunity they are searching. So this is the structure, and these are our panelists. So you can understand all panelists are important and expert in this area and doing work on this. So next, friend, this journey of our knowledge sharing is continue. And I have to just inform in advance that our next webinar is business valuation and financial modeling, synergy, deal pricing, and value assessment. That is there. So this journey, which I have mentioned, it is there, and the program structure will be like this. I'll give just initial thoughts on this subject and linking, so everybody will be very, very clear, and everybody can talk about their experience. So first, Sudhanshu Birla will give the presentation. Then Mr. Pramod Maheshwari, Saurabh Chaudhary, Manik Padwa, they will discuss and share their thought and their experience and their advice to all, and what he see the future. Because the most important thing in our webinar, it is on system also, it is on the YouTube also. So people are, more and more people are, whenever they require to understand what is the role of AIF, what is the anchor role, what SME IPO, these things it will be helpful guidance for them, so they will understand. And then after that, we will have question answer, and this question answer which we have prepared, and the public will ask those who are participating. That is very, very interesting and very, very connected to the subject, and which is the need of everybody's understanding. Before I will give handover to Shivanshu, I just want to give my basic point on this area, what I understand and what is my thinking on this. So first is, this particular program is a dual engine of growth we are talking. So first, AIF offered structured, long-term and conviction-based capital. That is one part. Second is SME IPO offer listing access, public credibility, and future scalability. If you combine both, it creates capital consortium. Private to public transition with minimal dilution and optimal timing. That is the role of this today's webinar. This is strategic capital raising through AIF and SME IPO synergy. So this is the synergy. So how AIF act as a pre-IPO escalator, fund companies 1 and 2 years before IPO for expansion, governance, and cleanup. These are 3 important points, because expansion is there, then governance, because they check everything, and the cleanup if something is not correct. Then prepare company financially and structurally for listing, because when anchor investment or the AIF comes, they ask various questions. They are not just investing money. They see the visibility, they see industry, they see promoter, they see the business growth, and they see the governance aspects. And then prepare company financial and structuring for listing because they correct everything. Increase valuation arbitrage between entry and listing because they are coming at a initial stage, so the listing will be higher. So they do arbitrage on this valuation. Then come to the strategic advantage of combining AIF and SME IPO. So first is valuation bridge because lock in lower valuation by AIF. That is one they do. They realize higher in IPO. That is secondary option. So invest in less and exit at a higher price. Then IPO credibility. That is another aspect which is a very strategical point. When you are going for IPO and AIF participation is there, it signals that due diligence has taken place by these people. Then anchor effect. AIF act as an anchor. They invest money and they can act as an anchor also, or promoter confidence enhancer. That is another part, because if anchor investor is coming, so the confidence of the general investor enhance multiple. Then governance upgrade. That is also I told. AIF insists on better compliance before IPO. Even IPO, when they invest, they ask for the compliance. That is another aspect. So cleanup process is taking place. Now, capital structuring, timing and sequence. It is also very important when the AIF to public. So they use AIF round for capex, visibility and balance sheet cleanup. Plan IPO when you have to bring out after 2 years, 3 years or 1 year. Cap table is simplified. Revenue is recurring because when they invest, they see all these things. Governance structure is IPO ready. Avoid raising capital too early or too frequently. That is also because I have just told you the profile of all the people. They have high qualified people, worked in a big companies, understand this market, doing this. Shivanshu is from IIBS Hyderabad. He has done his MBA there. He has learned. He has meeting so many people, doing this. Pramodji is doing. Manik is doing, and the Saurabh is doing. Manoj is meeting various people. So they all understand and they see how best they can do. And then SME IPO eligibility and readiness checklist. That is also when AIF comes, invest money, they do. They correct paid up capital, net worth, profits, internal control, board composition, tax, ROC hygienic, investor deck, DRHP, valuation report, merchant banking selection. All these things are required when you are going for SME IPO. These are the checklist. And in this checklist, your AIF investor always help you whenever you require anything. If you see some lesson, then those companies that use AIF, high IPO is always higher subscription, better valuation, and smooth compliance. Smooth compliance because they insist. Better valuation is they have a confidence. Higher subscription is that public see that these are the good people in this issue. So that is another thing. Company that went IPO directly without structuring face pricing mismatch, delay in approval, or post-listing underperformance because they have not getting that guidance which is happening here. Today, AIF, if we see Indian market, is a nascent but readily evolving. The AIF market is still as a adolescence, barely a decade old. 2012, 13, we've started just from 6,000 crore. Now it is a 13 lakh crore market in 2025. AME have exploded, but participant is still limited to HNI and institution. So India will witness shortly the first wave of fund manager liquidity building pre-IPO and SME strategy. So AIF market is slowly growing, developing, and people are identifying alternative source of fund. If you go to any website of any ICICI Direct, HDFC, the various other sites which are there providing online equity market trading, Now, AIF is one of their main point that it is also available. And friends, it is not Indian market because it's a developing. But if you see US market, P and VC fund regularly bridge private company to Nasdaq and NYSE listing. That is also in the same way. AIF often as an active board participant, not just capital provider. That is their role because they have a matured market. Structure exists via private investment in public eyes and SPAC are very common. If you go to Europe, EU-based AIF MD allows cross-border AIF marketing. Today, you are confined into one country, you can go to this. ESG AIF are incentivized under green finance directives. That is another thing. In China also, which is very conservative and very government oriented, the government-backed AIF focus on a strategic sector and bridge pre-IPO companies into star market listing. That is their role. AIF play a national economic strategy role, not just a capital deployment that is there. So in the last, role of AIF in Indian SME IPO segment is growing. So the smartest SME IPO in 2025 are not bootstrapped. They are all AIF nurtured. So the AIF is investing money, nurturing, and then doing. Otherwise, previously, what is happening when somebody is starting up something? So bootstrap was a common phenomenon. And that's why AI is enabling pre-IPO cleanup and mentoring, cap table and board governance, liquidity support also they are saying because sometimes they act as a anchor or price stabilizer, valuation enhancement because of their role, their entry is price enhanced will take place automatically. Funds as a fair value they invest before public market, regulatory handholding, merchant banker, fund manager, promoter work as a pre-IPO triangle. So all these people, all these things are happening and AIF is helping them. Now, in my opinion, it is for those who have not done much or those things, AIF is a good investment tool now. For investor, high potential companies before public listing because you are getting at a very cheaper price and then listing is taking place. And this is not, this is a very structured process. Discounted entry and clear exit horizon, that is also there. So you know that this, I'm investing in this company through AIF and that their horizon is very clear. Excess of unlisted alpha, not available to mutual fund and PMS. That is another advantage which we can get. For promoter, now this is the advantage to investor, but what is a promoter? Promoter, they no need to dilute early in IPO. Excess of a smart capital plus compliance guidance they get from this and build market trust in IPO story. Because when AIF investment is there, then they help and then they convert into anchor also. So both way they are taking advantage and they are taking the best return. And always AIF promise higher return than normal return in the market. So final reflection of mine is globally AIF shape IPO. In India, they are starting to shape SME IPO. So here, this is only one difference. We are starting with SME and other mature market is doing for all types of IPO. As an investor, as a promoter, we must not just to raise capital, but to raise strategically at the right stage from the right partner and with the right end goal. And that will be a win-win for all, the promoter, company, and the investor and the AIF. All four will get benefited. So the money churning will take place, money capital formation will take place. They will earn money, put it money for other. So that is another aspect. And the amount which I told you that Indian market has growing up and this 13 lakh crore AUM is also becoming very high for this. So with this is my initial comments on this AIF and the journey with this. My expert will tell. So I will start with Shivanshu first to give overview on the insight of the AIF and SME IPO synergy. Then Pramodji will take your words and then Manik and Manoj and then we'll have a question answer.
Sure. Thank you so much, Pavan sir, for the lovely introduction. And I think you have said it very rightly that, AIFs are at such a juncture and important part of, overall growing economy that, we can't discount the fact that the fund managers who are participating in not just SME IPOs, but also from various categories, from category one, wherein we do angel investments, or VC funding, where we invest in startups mostly, which are established, right, from private equity. I think every part of those investment cycles add on to what we are trying to build as a nation. So maybe what I can do is I can share a small PPT with you all, which my team has prepared. And then maybe I'll take 15 minutes to walk it through on how I think the India's growth story, where today we stand at $4.1 trillion as the GDP. And as you know, the economists expect that we'll be at 30 trillion in coming 2023 years, that is 2047 goal. So would love to, share my views on how I think India is well poised and how AIFs play a very critical role when it comes to enabling this growth, as well as obviously keeping in mind the main board and the IPO segment side of things as well. So as I said, currently, I think you'll be able to see my screen now. Yeah, thank you.
Yes.
Yeah. So India, where we stand today, we stand at a 4.1 trillion GDP size. We stand at 6.5% GDP growth as of now. And the most important factor is also that we have a median age of 29 as of now, and working population of 67%. We are finding ourselves where China was finding itself in 30 years ago. And we all saw, where China went in last 30 years, right? It's now a global economic superpower. It's a factory of the world doing so many things, right? Right. So India is now well poised to reach, grow at a much faster pace than 6.5 currently. And for that, obviously, we'll discuss various factors that are involved. So yeah, wait a sec. Uh, okay. And what we talk about, what every economist, even many political parties talk about, the 2047 vision, right? The Viksit Bharat vision that we have. We want to have an economy with the 30 to 35 trillion range. And just implied my growth rate, I calculated it would be a approximately 9.6% nominal GDP growth over the next 22 years to get us there, which is implied rate of 10.3 on a real basis. Would you think this would be achievable? Yes, it is aggressive, right? But if we talk about it realistically, we may combine uh, we may have to combine 6 to 7% real growth with moderate inflation to actually reach there. But a lot of structural reforms which are currently underway also have to take place. And now, if we talk about various factors, which position India at the right juncture, first of all, as we talked about it initially as well, first is demographic dividend for sure, right? Currently, the median age is 28 to 29, 67 in the working age, and the demographic dividend will pay us off for next 20 years at least. Second would be the global capital inflows, the FDI inflows. The world is looking at India as our next investment hub, right? The inflows have rose to $81 billion in FY25, and we are currently at 15th when it comes to FDI inflows. But if you see the size of the economy, it is a large amount of flows that are coming to India. Third is digital infrastructure, right? We have been building our own tech platforms, and UPI is a great example of that. We are now even exporting our own tech stack to the world, right? I went to Europe last month, and it was great to see that people are now adopting the QR based payment system, which was now exported from India. So that's the power that we are generating within India, the ecosystem that we are developing. Fourth is infrastructure push. Government capex has increased 5x over the last decade, especially in infrastructure projects. And I think we have seen the same trajectory. How the infra stocks are doing on the stock market. The and the last is the entrepreneurial ecosystem. There are more than 1.8 lakh recognized startups who are at looking at innovation at scale. So these are the some of the factors. I won't say these are all the factors that we have listed here, but some of the factors which are contributing to India's growth story until 2047. And I think this is a very interesting slide. We when I was doing my economics honors, this was a very 101 chapter that we studied. That there are four factors of production, right? Land, labor, capital, entrepreneur. Everyone talks about it, and I also talked about it earlier on in my webinar as well. So land, if you see, if the economist had to write this chapter again, maybe the terms would change, because now land is not necessary, because so many startups, so many companies currently that are building are tech enabled, right? But in a tech enabled and a service led economy, digital infrastructure is the new land, I would say. And I think land could be now unanimously used with resources that you might need to build that infrastructure. Second, as I mentioned, is labor, right? Human capital that you need. And I think currently labor would mean skilled workforce that we have. China is obviously banking upon the skilled workforce that it has. Now, with growing skills in coding, AI, ML, product development, I think these are also the part of the labor force that we need to build until 2047. I'll come to capital later, but if I talk about entrepreneurship, right? Entrepreneur is someone who is willing to take that risk from building 0 to 1, or maybe 1 to 100 as well, right? So with more than 1.8 lakh registered startups, and if you have maybe reading newspaper recently, the scale at which new companies and new LLPs are registered is at all-time high. So I think this overall, if you put it that way, I think we are at the juncture wherein so many startups, so many people are also coming forward with so many policy changes coming in the startup ecosystem to support the industry. One small example that I can take is, so as Pawan sir was telling me, I graduated from ISB Hyderabad, and so at my time was a critical juncture wherein ISB also recognized that we need to have a entrepreneurial ecosystem. Otherwise, right, in the business school, it's typically that you pay a hefty fee and you take a good placement and then you are into corporates. But at my time only, I was sitting with one of the leading professors at ISB, and we chalked out a plan on how entrepreneurship could be inculcated in the ISB's framework. Then so many new and this is not just restricted to ISB in particular, but other business schools as well. Top business schools are also doing it to promote entrepreneurship. They are increasing the moratorium for any amount of loan. They are providing the right support and funding. They are providing incubation centers within the campus ecosystem. So many things are coming up. I think we are just at the right juncture in that regard. And the last and the foremost is the capital. I think capital was needed in 1900s, 1950s, 2000s, and now that we are in 2025, this is something that you always need to have in order to build a business, right? Initially, we were more reliant on the bank loans, etc. But now, as the system is evolving on the equity side of things, so the capital has been the most important part. And if you see, land, labor, capital, entrepreneur, even if one of the piece is missing, you can't be building a business, right? You need all four of them to build a great business. And I will just want to talk about why the capital is a very critical bottleneck, right? Why it has been a critical bottleneck, but now the problem is solving, right? I would want to focus on that part. So earlier on, we had a bank-led economy wherein even if we talk to SMEs currently, right, I went to this small town in Uttar Pradesh where I was talking to one of the promoters, and they have heavily relied on bank loans for any amount of growth that they were targeting in their business. They never considered that they can even consider a equity funding from a outside capital. So that has been changing lately. And then there is an explosion of domestic savings. The SIP AUM has crossed 15.3 lakh crore, but obviously it's restricted to the large cap side of things. And there is a very much a need of high risk, high return pools, right? So if you see the pockets of wealth, obviously there is a lot of skewness when it comes to pockets of wealth. Some people who are having wealth, it's in huge amount of numbers, but there are huge amount of people who are left behind because they don't get the right capital, right opportunity, or may not have the right skill set, right? So given that we are building this AIF ecosystem as a whole, it enables ones who have the right opportunity but not capital to access that and create wealth for themselves as well as the people involved. And fourth would be the regulatory evolution. SEBI has built detailed AIF frameworks. It was introduced in 2012, but it has been updated every year since. And currently, we hear from SEBI time and again on new regulations on how we can make it tighter as well as enable, the growth in Indian economy. So we are working on all fronts in this regard. And if we talk about what exactly are AIFs, I think I just covered it earlier on as well. So there are three categories, right? Category one AIFs are morely focused on, venture capital funds, angel funds, SME funds. This in this category, most of the funds that operate work on, the things or invest in those companies where the government would want to promote those investments. Category 2 AIF are mostly high ticket sizes, credit based or debt AIFs, or also doing private equity on the side. And the third category is the mostly hedge funds who do diverse trading strategies on listed companies. They can do commodities, they can do currencies, etc. They can do anything. So category 1 AIF is mostly focused towards the startups, SMEs. Category 2 mostly on the debt and private equity side, and category 3 more on the listed and options, futures and option side. So that's the framework that is laid down by SEBI. And current scale of India's AIF industry, more than 1,500 plus registered AIFs in India, and that has been growing at a CAGR of the AUM for these registered AIFs is growing at a 28% CAGR. Currently, we are at 12.5 lakh crore of total committed commitments, and out of which 5.4 lakh crore is already invested, which is also growing at 32% year on year. So you can understand the scope, or you can understand, how everything is coming together. The right set of opportunities are coming, right set of investment theses are building in India, right set of investors are also ready to invest in such AIFs who are focused on such investments. So it's easier said than done. I think as in the earlier point, it needs a lot of check boxes at every step for this kind of growth, and that's exactly what has been happening. And how AIFs actually reshape the real economy, right? So if you understand, for example, if there is a, maybe if we talk about 50 years before, if you didn't have, even if you had a great idea and you wanted to start something of your own, I don't think apart from friends and family, you would be able to get much support other than a bank if you have a collateral. But now that if you have a good idea, you have good education background, you have that proven capability as well to move things. I think there will be people out there to listen to your idea, maybe provide you with some support as well, or maybe guide you in the particular direction. So that's the number one step overall. SMEs, I think India, more than 60% of the GDP is coming from SMEs. We don't recognize it enough because they are in huge numbers in every nook and corner of the economy. We see small scale SMEs, small case factories as well. So, Pawan sir, are you saying something? So sorry. Yeah. So for SMEs, it has been a great enabler as well. And if we talk about success stories today, so many listed companies, right, including likes of Zomato, Policy Bazaar, new age startups that you see, even Lenskart for that matter, right? I think that's a real that has been the recent story as well. Grow, oh, sorry, not grow, but these companies were initially, the founders began from scratch. They found the relevant capital, a good fund manager backed them, scaled them, helped them build their capabilities, etc. So a lot of value has been added by AIFs in general, which if we really look at the data, a lot of value has been added. And if we talk about AIFs and how we see India's 2047, I think the capital infrastructure overall from 4 trillion to 30 trillion, right? We need very smart capital to come in. And when we say AIFs, it's not about just a structure. It's the people also behind it, right? Investment managers who are highly qualified, highly, knowledgeable. They understand the business. They understand the business model. Who are able to make the right decisions at every step on which company to back. If even if you're backing a particular company, what all to look at. So it's a lot of smart capital to be deployed in order to reach 30 trillion mark. AIFs, India's obviously it's a smart capital operating system. As I told you, there are so many people working behind a AIF, doing their due diligence at every step. Sitting with the promoter, mapping the vision with the promoter, how they can enable that 1x to 10x growth for that company. So that's a really a mentorship as well as the financial support then that any company can get from the AIFs. And then there is a global integration, right? The Recently we also saw so many AIF set it up in Gift City. So what Gift City is enabling is foreign capital to flow into India, and the taxation benefits and all the nitty-gritties involved, which were earlier on the bottlenecks of any foreign entity investing in India. We are trying to solve that via Gift City, and we are expected to cross 100 billion by 2030 already. And so many AIFs are coming there as well. Most of them are category 3 AIFs, but we can't discount the fact that world is looking at us, and Gift City is a good way to bring in the foreign capital. And the policy convergence, obviously, so many government schemes, SEBI valuation rules, and RBI exposure caps when it comes to NBFCs, etc. Everyone is looking at developing this ecosystem even more robust in coming times, so as to safeguard the interest of all the investors as well as promoting growth as well. Now, if we talk about IPO framework, right, I think that is the crux and the topic of the conversation also here, and how these QIBs and anchor allotments work, and how these AIFs are also enabling or driving the growth in India's primary market. I think it's not debatable that when we talk about primary market, the company coming to IPOs, issuing their shares to the public for the first time, it's a very very huge opportunity for anyone to invest in a company. Plus obviously it rewards so many efforts from the promoters and from the managements, and has come through so much sweat and blood involved in building a business. And finally the day comes when even the retail public and the external public is also investing in a company. It's a huge day for any company. So when an IPO comes, right, first of all, there is a 50% allocation approximately. I am talking about, I won't get into the nitty gritties of different types of IPOs, but approximately 50% of the issue is subscribed by AIFs, FPIs, mutual funds, and NBFCs. Right, the retail reservation is approximately 35%, and the HNI or UHNI reservation, or NII as we say it, is approximately 15%. Right, so 50% of every IPO, if we just take that figure for example, 50% of every IPO is written down by these AIFs, mutual funds, and FPIs. And what it enables is it gives confidence to other retail investors or UHNIs that are investing in that particular company, because what they expect is this particular fund, these particular fund managers are already showing strong interest in such companies, already showing that they trust their business model, their growth trajectory, and hence everyone benefits from that as well. And within the QIB bucket, up to 60% of QIB shares can be uh, allocated to anchor investors before the IPO opens for the public. And if we see from that standpoint, so just wait a second, how AIFs are now shaping the IPO outcomes, right? So as I told you, there is a certain portion that is dedicated to QIBs and AIFs, right? So many domestic mutual funds, insurers, pension funds, foreign portfolio investors, and AIFs are already competing for that 50% QIB bucket for any good company. Then there is anchor placement. So anchor placement, just to give a broader definition, it's for this anchor investment, you have to, if you participate in an anchor investment as an AIF, you get a sure shot allotment. You are not competing with any other QIBs or even retail investors for that matter. Oversubscription doesn't matter if you're getting an anchor placement. And then it also helps in price discovery. If so many brains, so many fund managers are backing a particular company, they might have thought about what valuation would be right for the company, and also to make from the growth trajectory perspective, how we can actually value when the company is going from IPO's angle. And what AIFs actually add to the IPO is if a good AIF is investing in particular company, you can get a signal that the corporate governance would be sorted in that particular company. If the AIF has already backed in a pre-IPO round, AIFs can also obviously invest before listing. So it adds on to the credibility of the company and what they are building. And overall, if there are good number of anchor investors or AIs participating, it acts as a good signal to overall retail economy as well to participate in that particular IPO. And the topic of the even granular matter is SME IPOs, right? So just we have talking about particular SME funds which are very active, including us, Makia Capital. Manik is also here. Tryrock Capital is also investing in SME IPOs, and even Manik has participated in many main board IPOs as well. So he'll be sharing his thoughts as well. So these and Persistent Growth Fund, ARTHI, they are some of the AIFs which are very active in the SME ecosystem per se. But the message that I want to pass on is there are four critical functions specifically for the SME ecosystem, right? As you know, there are two boards, right? SME board and main board. Main board companies are still professionally run companies, have a certain scale to them. Certain, AIFs or VC funds are already backing them up. But the SME companies are usually smaller scale companies, more riskier when it comes to management, when it comes to business models, and these are primarily promoter driven companies. So if a AIF is investing particularly in SMEs, so it acts as a risk validation signal, right? SME issuers have concentrated customer base and thinner governance, and AIF participation would signal that a SEBI regulated capital has underwritten the business model overall. It also acts as a due diligence proxy. So, for example, if any AIF is investing in any company, they do their own diligence, they sit with the promoters on what to do next, etc. So, if a AIF is backing a particular SME company, it gives a signal to the broader audience, broader retail investors, etc., that a due diligence has been done on a particular company. Price discipline would mean that obviously when AIs would enter, they would want to have that attractive valuation for them to enter. And eventually the goal for every AIF is capital gains, right? So if the business metrics are ticking and the valuation up, they are seeing a good valuation uptick, they'll be investing in that fund. So it acts as a signal for other retail investors. Having said that, it's not like it's a foolproof plan that if a particular AIF is investing, it'll be a good investment. I think everyone can go wrong here as well, but it acts as a signal. So yeah, that is my thought on how the AIFs are overall shaping the Indian economy, have a good say on how the IPOs perform, and play a even critical role when it comes to SME IPO side of things. And just want to conclude with this smaller slide that if India IPO markets are at the front door to wealth creation, I think AIFs are the bouncers and the curators, deciding who gets in at what price and with what quality of governance. So thank you so much, Pavan sir, for providing me this platform to share my thoughts. Would love to move forward with the webinar and hear others' thoughts as well.
Thank you very much. Thank you, Shivanshu, giving a very detailed presentation and explaining everything. Now it's a turn to listen from the horse's mouth about the successful AIF process. So I'll invite Mr. Pramod Maheshwari. Pramodji, you are now not only an entrepreneur, you are educationist also. You are having a listed company. You have gone through this journey. You are providing this type of capital also. So your take on this. You are free to speak on this topic, whatever this, and a specific point I'll ask you in the question answer, sir. So over to you, sir.
So thank you, Pawanji, and good afternoon, ladies and gentlemen. It's privilege to be part of this important discussion on how AIF and SME IPOs are shaping the next wave of Indian growth story. And my journey, and I will share with my journey, like what I have experienced in my life in last 30 years.
Okay.
So my journey has been very interesting. I come from an education background, so I started a tutoring company in a small garage, grown the company, scale it, and then took the company, raised fund from HNI, then from private equity, then a pre-IPO round, and eventually took the company public on the main board. And then later on, I did the demerger of the company, created an NBFC out of it, which became a qualified institutional buyer. And today, we have the two listed companies now. So one is the Carepon EduTech Limited, which is an education company, and other is CP Capital Limited, which is an NBFC and also a qualified institutional buyer, where we invest across SME, main board IPOs. We are sector agnostic people, so and participate as pre-IPO investor, as an anchor investor in SQIB. And I will keep more discussion around finance business of mine, less around education business, because I think that is something is of importance to everyone. So far, I have anchored three IPOs and been qualified institutional buyer in more than 20 public issues. We started aggressively in last couple of months. So I've seen both sides of the table, as Pawanji saying, that as a promoter raising fund and also as an investor evaluating opportunities. And I would like to be specific to the today's topic, that why AIF and SME IPO funding pathways matters. Like, why does it make a difference for a SME company? See, based on my experience, if there are one thing I have learned is that capital is not just money. So like if you're running a company, when you raise capital, it is not just money. It is a confidence in your own business. It is a credibility you build in the market. And it is your capability to scale it up. So AIF, when AIF or any institutional investor invest in your company, it brings discipline in the journey, early journey. So like if you're running a business, you need to be disciplined to take it public. And what discipline is required? Strong governance. Like, as a small enterprise, we do a lot of things. We do whatever we want to do in our business, in a desi style, किसी को भी पैसा दे दिया, किसी से भी ले लिया. Like there is no strong governance we put in the system. So when any institutional buyer come on the board, they bring discipline, which is very, very important for a company to take public. Very specific focus financial reporting system to be placed in the system to make it big, to get it ready for an IPO, and clear growth roadmap. So many times, like as an investor, as an entrepreneur, as a startup, as an individual, if you're running your business and making good money, you start thinking of multiple things. Like I'm getting money, why not invest in the real estate? Why don't buy some stock in some other company? And you sometimes lose focus on your own company, which is treasure of gold, diamond. So that's also when AIF, invest in your company, some institutional investor come in your company, then you get that kind of a clarity and roadmap. And see, SME IPO then take the baton forward. So if you are put every discipline in your system, then SME IPO or main board IPO take this baton forward to the broader investor base, market visibility, and long-term sustainability, and obviously a lot of wealth creation for yourself. So, and continuous access to the capital. So like you want to grow your business, seamlessly funding runway, you get the seamless funding runway for any business looking to scale from 50 crore to 500 crore to 2000 crore and beyond. So whatever you want to do, you can do if you are focusing your business and able to create a fantastic business out of it and having all discipline in place. So I can share a couple of my personal lessons from going public, because I took the company public, and what has been my journey. The first thing when we decided to go public, we raised fund from Ultra HNI, then followed by a private equity fund, and then from a family office kind of Ultra HNI. What happens with those funds? We got prepared for due diligence long before we went public. We clean our books. We were focused. We had our clear roadmap for our financials. So like it's a predictable cash flows. governance our governance become mature. And obviously, when all these funds invest in our company, it proved that promoter integrity to the business. And what I've seen in last 30 years, most companies start preparing after they decide to raise fund. The truth is, preparation start 18 or to 24 months before you raise fund. So, like, you need to start early, and for that, institutional capital act as a catalyst. Sorry, it acts as a catalyst. When our HNNP round force us to systemize our business, strengthen the management team, and bring procedure and system in place. And this upgraded dramatically not only our business, but improved our valuation before IPO. The first round of funding which I took in my company valued was 50 crores approximately. And at the time of IPO, I'm talking about 2014. At the time of IPO, the company was valued around 500 crore rupees. And it all happened within 2 years of time frame. I raised fund in 2008 and took the company public in 2010. So within 2 years, valuation from 50 crore to 500 crore. This is possible only because when we raise fund from institutional investor, they put system in place, they strengthen our management team, they work with us and shape the business. So this is the lesson, I would like to share with everyone, like start preparing well in advance before you decide to go public, because it gives you time. And when this kind of investor comes on the board, investor don't just bring fund to the businesses, they fund clarity, they fund governance, they fund ambitions. And if you show scalable economics with transparency, demand always follows. So you need not to worry about the fund, who is going to invest in your company. If you have a business, scalable business, if you are able to, make it transparent, lot of people after you to invest in your business. And obviously for this, you need a partner. How can you multiply your strength? You are good in your business, but let's say you are not good in finance, you are not good in raising fund. How can you multiply your strength? Have some institutional investor with you like AIF who comes early on the board. And that's how, AIF uh, helps you to get you ready for IPO. So if AIF invested in your company, then obviously for following investors, it's the message is clear that company has been vetted, because AIF accelerate professional governance, audit quality, promoter discipline, financial planning, board, etc. So that helps you to prepare for an IPO or follow-on fundraising. And when company with AIF participation goes to SME IPO, investors specifically like anchors, like I'm being an anchor, so I always look on the company existing investor base. And if there is a good investor base, it gives a lot of confidence to the anchor or QIB that yes, company has been already being vetted by uh, you know, some fund or some smart guy who understand the market, understand this. And obviously this help you or help the company for subscription, for price confidence, post listing stability. These are the areas which are very, very important for anchor, for QIB, whether post listing price will sustain or not, uh, whether I should invest in this company or not. So I always look at, who all are the investors base existing in the company, etc. And this is why many business should think about AIF or institutional round before IPO, and builds credibility that retail investor or follow-up investors cannot ignore. I will like to share a few points for SME bound companies where they should focus on. Governance. Act listed before you get listed. Governance is very, very important. Quality AMIs, internal audit, independent directors, implement them as early as possible, because this is very, very important to build the confidence. valuation. Tell your growth story with numbers, not by your business. See, everybody understand your business. If you are gonna say subjective thing about your business, perhaps people will able to understand your business. But how your valuation will discover. So tell your growth story with numbers. Be realistic. Show visibility of cash flows, not dreams. And once you get the right valuation, focus on internal systems like due diligence. Every small mismatch becomes a big question mark later on, because small companies usually have a lot of issues, and therefore it is very, very important for you to reconcile financial, clean shareholding structure, document everything, etc. If you have all everything is in place, then it builds a lot of confidence and equity story. Investor fund a narrative backed by execution. So it is not just a narrative. If you are able to execute it, yes, the investor will come. So like your pitch should answer when you speak to any investor, your pitch should answer why now, why you, why this industry, what is the what is the scale potential. Because if somebody is telling me this is my business and you should invest now in your company in this industry because it is having a scale, I just can't ignore your business as an investor. And most important thing, raise fund when you don't need it. The best time, what I learned in my life, the first time I raised fund, I was not in need of fund. The second time I raised fund, I was not in need of fund. In fact, I was in a very strong position to negotiate with my investor that if you really want to invest my company, that's your call, not my, requirement. Though, so it's very, very important raise when you don't need. Most of the promoters think that dilution will happen if I raise fund. See, dilution is one thing. Yes, you can give attest to it, but it is very, very important to raise when you don't need it, because the best time to raise is when your numbers are strong, not when you are desperate. If you are desperate, you will never get valuation, and you will perhaps not get even fund. So best time to raise when your numbers are strong. And I will not take much of a time. So advice to the founders and promoters, if they are on the webinar preparing for SME IPO, here is my advice in one line. Prepare your business, not your PPT. Right? Most of the people invest a lot of time in making PPT. Yes, PPT is important to show your business, but first prepare your business. Focus on system, compliance, cash flows, people, technology, market positioning. Funding is the byproduct. If you are able to, prepare your business properly, then funding will happen. And as Shivanshu was saying and Ali speaker was saying that we are entering in an era where Indian mid-sized companies will become global brands. And the combination, I personally believe, of AIF and SME public market is creating a very, very powerful path for high potential businesses, because there are many high potential businesses. People are not having access to capital, not having knowledge how to access the capital. And if you are able to access the capital, you can do wonders with your businesses. So if you build a very disciplined and vision, market will, if you have built with a disciplined vision, market will support you. That's what has been my experience. And I have lived this journey myself from private round to main board listing. And I can tell you, the IPO is not the finish line. It is the starting point for a larger and more meaningful journey. So I believe that's more than sufficient for my side for time for time being. More when we have question and answer. So thank you very much, and thank you again giving me opportunity to speak.
Thank you, Pramodji. Thank you very much. Prepare a business, not the PPT, is the right word which you are saying.
Yeah.
Back, one promoter came to us and he was telling that this is my business model, this is thing, and on the PPT, on the Excel he was making. So we mentioned that this business is not giving correct result, correct valuation, or it will not give because your EBITDA is less. So बोला अभी कर देते हैं. उसने वहां पे change किया.
Right.
So,
So you you
so
you you prepare your business, not your PPT and Excel.
yeah, so we discussed with him. But after that, I told him goodbye.
Yeah.
Sir, I got a comment from a very, very senior ex-SEBI official. Mr. Pramod spoke very well from his heart. And I was also feeling, and your advice, which is very, very unique, raise fund when you don't require funds. That is very interesting, but tough to implement it, because when we require fund, then we go to the people. Otherwise, we are silent.
No, I firmly believe, like, there is a mentorship required for the promoters, because when you need fund, you won't get fund.
Yeah, that's right. That's right. That's right. So your speech was superb. You
Thank
have
you very much.
in 20 minutes, you have not spoken about the AIF. You have spoken about the actual what investors looks in a company. Investor is not investing money in your narrative. Investor investing money on some solid ground, and the
Yeah.
governance and the compliance and the unit, like you mentioned, DDR, due diligence. So you have to do due diligence, because one transaction, suppose you are giving some numbers and the numbers are not matching with your projection, so the confidence is going out, whether you say this is my one mistake, but one mistake costs you a huge fund, huge and simultaneously valuation also.
So I've
So
seen many times, many deals, failed just because what they said, and at the time of due diligence, things were completely different, and they
absolutely.
failed to even execute the deal. It is not only the deal they failed, but also the reputation. You can earn everything, but you cannot earn lost reputation in the market.
Absolute right. Absolute right. Pramodji, very nicely presented from your heart. And
Thank you.
really, I was mesmerizing and noting down all the points of your discussion. And it will helpful. And when I'll ask questions, I have prepared a question for you, which is very, very interesting. And you can give this answer. And everybody, I'll request all the participants, please learn what he's saying. He is I think, entire lot, and very few people, those who are investing and those who are the company also earlier. They were requiring fund and now they are giving fund to others. And both role he has played and he has seen this.
I
So,
will add one more thing. We are still working with one of our company to take it public. So
okay,
again, we are on the both sides.
okay,
So we are
okay.
working for our agro company, and perhaps in a year or two, we will take it public.
So that's why you understand what investor wants. So you are preparing your company on that basis. That's the best part.
Yes.
Okay.
Yeah.
So Manik, now your turn, because Pramodji has given a complete different roadmap. Over to you, Manik.
Thank you so much, Pawanji. First of all, it'll be very hard for me to say anything more than what Shivanshu covered and what Pramodji covered. Before I begin, sir, Pawanji, just a small comment. I have been following what corporate professional has been doing for last 5 years, ever since COVID happened, the webinar. It has been, personally speaking, it has been a very important part of my professional journey, the webinars that you have been doing. And I'm sure a lot of all the participants on the yeah, on this call also feel this way. So first of all, sir, congratulations and
Thank you.
my very high regard to what you're doing and what you're building in CP. So I want to start off quickly with what Pramodji mentioned. This is something that I've learned, growing up. So my father has kept saying to a lot of companies that we work with that take the money when it's available, not when you need it. And it's what Pramodji also mentioned, right? It's when you actually need capital is when the capital is scarce, right? So take it when it's available. And over the last 3-4 years, what has happened, especially in the SME space, is that there's been an emergence of AIFs. Shivanshu and I, we work very closely on a lot of mandates, a lot of projects, even discussing a lot of academic theories. And one thing that we've realized is the institutionalization of this capital and how important it is. The explosive growth in the AIF ecosystem, especially focused for SMEs. And what it has done is, of course, Saurav's also joined, work closely with Saurav as well at Raghunath Capital and also look up to what he's building. So what has happened is the pools of capital, AIF is nothing but a pool capital. In our case, it's just essentially family office, not as professionally run as what Shivanshu's built at Makia Capital. But what it has done is it's pooled a lot of institutional capital, and what it is providing is patience needed for SMEs, right? Which is why we are seeing a lot of growth in the pre-IPO space, in the SME space. I do not think this was the scenario 10 years ago when SME space was just building, the SME capital space was just building. It has only been made possible over the last 3-4 years because of a lot of capital flowing to SME space, and more so the institutional capital. Pramodji mentioned that seeing the existing cap table, what it does is it gives comfort to some of the HNI, some of the retail investors, that these are the people who are backing certain companies. And because they are invested, they are patient capital, they come in with a lock-in, so they would have done their due diligence in the company. And this is what essentially SMEs need, right? Patient capital, someone who can anchor other investors to come in and invest in their businesses. What I foresee it'll eventually do is, number one, it'll help companies get better valuation. Close to about, again, 7-8 years ago, pre-COVID, SME companies would not list at a valuation earning multiple of more than 10. Typically 8, 9, 10 is where they would list, right? And they're able to now successfully list with a higher multiple, tell their story in a better way because of patient capital and better anchor sort of investing in these companies. Number two, the due diligence. Again, Shivanshu mentioned this, Pramodji, you also mentioned this, that because these patient capital is coming in, they want to be doubly sure that the company has both, all three things in place, right? Number one, a good corporate governance, a good promoter quality. Promoter comes with and it's not just promoter driven, it is driven by professional management. And there is impeccable corporate governance layer already in the company. Number two, the product and what they're selling, right? Be it a service, be it a business. It is it has value in the market, and they can see acceptability and growth in what they're trying to sell, the company. And of course, last part being price. So AIFs essentially invest in 3 stages in an SME space. This is what we are seeing. Obviously, a pre-IPO space, wherein they come in with a lock-in, depending on the category of AIFs, without getting into technicalities. And at the IPO stage, an AIF is a qualified institutional buyer, meaning thereby that they can invest in the QIB portion as well as come in as an anchor, which is also a recent phenomenon in the SME space and only developed in the last 3, 4, 5 years. Again, 10 years ago, you would hardly see any book built issue with an anchor book. It would only be fixed price issue. And anchors essentially are the one of the reasons why a lot of retail and HNI money flows in, right? People anchoring the IPO. And then the third layer, third stage where an SME, an AIF comes in, which in my personal opinion can be, again, a very, very developing sort of investment thesis for a lot of funds, new funds especially, which is post-listing, right? In the last 2 years, 3 years, again, north of 700 companies have been listed, close to about 650, 700 companies have been listed, right? There is not a lot of interest in those companies, and some of these companies are doing really well, right? From the money that they've raised from the public issue and the follow-on capital that they've raised. Before, some of these have migrated to main board, some of these haven't, right? And for personal reasons or whatever reasons, there is not a lot of interest in those companies. SME IPOs have seen a boom because a lot of capital chase the listing gains. But after listing, some of these companies, they stand in the shadow. There is not a lot of interest. And we are seeing an emergence of a lot of these secondary funds coming in to support these companies in post-IPO stabilization of it, which includes stabilization of their price, giving them additional capital via QIBs for them to migrate to the main board. So it's only possible through an AIF because a mutual fund, because of its size, would not typically look at, barring a few exceptional examples, outliers, would not typically look at SMEs. So it's only if someone has keen interest and do not have the skill set to invest in SMEs, because SMEs do come with inherent systematic risk, which includes liquidity risk, among others. Some of these SMEs have championed it. So people looking to invest in these SMEs can obviously look at investing in and indirectly investing in SMEs through AIFs. And AIFs, I believe the business is just it's abhi picture shuru hui hai, in my opinion. We'll see a lot of growth in funds. We'll see a lot of, when I say funds, AIFs, new funds coming in. We'll see a lot of funds coming in the secondary market. And of course, IPO mein to we are seeing a lot of funds already participating. So I think it is great as an overall economy also, right? A lot of SMEs being able to raise capital apart from your typical debt capital, to scale and have patient capital who can and have capital who can trust them in what they're intending to build. So these are, with these few points, this is what my 2 cents on the entire SME and AIF space. I again happen to have, again, very fortunate to have some vantage point where I run a fund, which is just a family office institutional. Also, like CP, work closely with corporate professional also in helping these companies go public. And we run a broking entity, wherein we have close to about 20,000 clients, where we see a lot of interest and a growing interest of a lot of participants in the SME space.
Thank you. Thank you very much, Manik. Thank you very much for giving insight of this. Now, it's a time for Saurabh Chaudhary. He is traveling to Bangalore and he may be in the car or some other place. So, Saurabh, can you join? Yeah.
Hi,
So,
Pavanji. Hi, I'm
yeah.
sorry,
So,
I'm traveling because of our immediate plan.
yeah.
Yeah.
So before Saurabh will share his point, I met Saurabh. I had just one meeting with him. I was so impressed the way he has a depth of the market, understanding of the market, and in a very short time, he has grown like anything. And the way his maturity was speaking on his investment and his talking about the market scenario and market things, it was mesmerized me, and I was very very happy to meet him, and that's why today Saurav is here, because it's my liking to him and my my thinking that he will do something great in his career. Over to you, Saurav. Your thought on this, so you can talk anything relating to this topic. Over to you.
Thank you, Pavanji. It was so nice to have me here. I'm blessed to be part of this institution and part of the journey where we have grown from nothing to something which we have thought that we will get 20 years down the line. God was kind enough that we got a good market, good space, and we were lucky to be part of good institutions that we have reached those journeys in 2020, which personally, if we have had set a target that I want to achieve this, the target could have been in 2040 or 2035. But because of the good market scenarios, the policies, everything was favorable, the market boomed, and we were able to achieve those personal targets, personal goals within a span of 3 to 5 years. I think everybody who started with SME in post COVID have enjoyed the fruits altogether, and we were actually very blessed to came across good people, good companies, good corporates, and good compliance people to actually achieve this goal. But sir, I have some of my points which might be alarming at this point of time with respect to SMEs. So, as I wanted to tell you, see, so first of all, I would speak pure truth. I would not want to have any buttering statements which give a good view, but end result will not help us, because outright everybody knows each other and they want to understand what is the actual scenario. So, as a speaker, I would like to add that see, the boom was created because the government wanted SME to grow. The government wanted SME companies to flourish. The government wanted SME companies to come up with equity capital, everything like that. But in today's world, if you look at, sir, the policies which are coming from SEBI, the policies which are coming from stock exchanges, the changes for main board listing, the requirement for SMA listing have actually, not been so favorable, because if some companies which is coming into SME, any investor who is investing into a SME company, the goal is to make money and to also exit part of the investment or full of the investment at certain point of time. For a institution or a AIF or a mutual fund or a insurance company who is buying some stake in the company, it will not be a small stake. It will be ranging from 1% to 5 to 7% of the overall market float, or sometimes the overall share capital of the company. In that case, sir, as an anchor investor, as a QIB investor, as an open market investor, because of the good numbers, because of the good growth story, because of the good valuations, we are able to, support the company, support the merchant banker in buying the shares, helping them out in the journey sometimes. But what is happening right now, sir, because the sentiment is so bad from the retail and from the government point of view, and some of the media has created such type of negative mindset, that post listing, if you look at, apart from 1 or 2% of the companies who have got very good support from institution, and it is not a single institution, it is backed by 4 to 5 large institutions or very large players in the market, not to name too much. Apart from them, sir, 97 or 95% of the companies are actually struggling to have any volume in day-to-day trade. A company which is having a market cap of 200 crore, the daily average trade volume is less than rupees 20 lakhs और 10 lakhs. 10,000 12,000 शेयर का वॉल्यूम है सर दिन भर में, नॉर्मल फ्लोट. If somebody who is buying 5 lakh, 7 lakh, 10 lakh shares of that company, the big chances is that, sir, if I want to exit, who will buy my stake? And there is a 3 year criteria for a main board listing. That is also subjective. The government may change the criteria at any day without prior intimation. So after 2 years, if we come to know that the criteria has moved to 5 years, or the net worth or the revenue criteria have moved to a threshold which is not achievable by the company, then, sir, the investor or the bulk investor is always at a risk. Boss, how will I liquidate my investment? Because as a AIF, I have to declare my monthly NAV, my quarterly NAV, my annual NAV. The NAV will be based upon the quoted price of the stock. Since the float is less, the price can be anything. If I want to actually manipulate the stock as a fund manager, it is very easy for me to just buy 10, 15,000 shares at the closing date. The price will go up, my NAV will go up. But I will be charging performance fees, carry everything from the investor on that. Investor will be very happy that so and so fund is giving 50%, 40%, 60%, 100% CAGR, IRR returns. But end of the day, sir, if he is actually trying to redeem his investment, I will only be able to actually redeem his investment if I am getting more funds from the other investors who are actually buying out the existing investor. Because I am not in a situation to liquidate my to liquidate my investment as a SME AIF. Sir, whom I will sell? If suppose मेरे पास 15 करोड़ का महीने का रिडम्पशन आया 100 करोड़ के या 200 करोड़ के फंड में, सर मैं माल किसको बेचूं? कौन लेगा माल? और यदि मेरे पास 7-8% का कैश है, तो मैं माल बेचने जाता हूँ सर, तो प्रॉब्लम क्या आती है कि माल बिकता नहीं है. बिकेगा तो सब्सटेंशियली लोअर बिकेगा. And we are on a regular basis connected with the company, hand holding the company. If suppose I am holding 7% of a company, I want to liquidate 2%, I have to find a buyer for myself in a normal case who will be able to liquidate me. If I ask the promoter, boss, do you have a buyer? He will say, sir, help me out on this, help me out on that. Sir, even after making my investment 3x, I am worrying nowadays, boss, whom to sell this. It is just a quote which I am getting. And as a AIF, sir, I have started with a viewpoint of becoming a SME dedicated AIF. But sad to say, sir, today I am very, very unhappy to see the market, and I'm not willing to invest more into SME companies unless it's a very good story backed by some of my good friends who are making sure that we have an exit at some point of time via XYZ means. But today, if I am buying an anchor, sir, within 3 months, I don't know how will I exit. Within 1 year, I don't know how will I exit. That is the biggest worrisome, sir. As a industry, yes, AIF will grow, SME will grow. But if you ask me frankly, a promoter comes to me and say, boss, मेरे को SME IPO लाना है. I am not. I would better suggest कि आप 2 साल रुक जाओ, मेन बोर्ड IPO लाओ. QIB category में IPO लाओ. Because as a SME IPO, sir, post IPO, I will not be able to, I will not be able to face that promoter. Either the stock price will come down substantially post listing because there is no post listing support from the market players, or it will go up. But if it goes up, there is no buyer. If it comes down, there is no buyer. Sir, how will somebody transact in a market where liquidity is very low? In the last 1 year, stock exchanges and SEBI, because of some of the bad IPOs or something which has gone wrong, 2, 3 IPOs which were ultimately taken down, not allowed for going to public. Because of that, the stock exchanges made a view that 90% of the IPOs are bullshit companies. Now they are treating it like, it is like a paper company, or the revenues are forged, this is that, this is that. So they are of the mindset that things are not aligned with most of them. And if we are doing any support to any company, sir, even our investing community is asking us, ki, boss, why are you buying these shares? What is the basis? Because in SME, what happens, Pavanji, everybody is aware that the current numbers are not very good. Either they have been migrated from proprietorship or partnership to company because of the mindset of a bania promoter or a local desi promoter. They have either not shown very good profits, the actual profits were there, or if they have shown fair profits, they are actually willing to grow post IPO because they have got the capex done. They are looking forward for working capital. They have got the targets in place. So if I'm talking to a promoter, he's saying, boss, my current year top line is 50 crore and PAT is 8 crore. Next year post IPO, I can go to 90 crore and PAT of 13 crores. And in the third year, it may be 150 crore and PAT of 25 crores. So if I'm having a 3 year projection, I can look at the company which is at a current PE of 15 with a forward PE of next year around 8 and a 3 year PE of 4 to 5. It looks very lucrative. But sir, if I am buying at a 15 PE, there are investors who are asking me, ki, why are you buying this company at a 15 PE when the other listed pair is available at a PE of 4 or 5, which is at a better valuation? I cannot say to them that this company has got a better growth prospect, this company has got this or that, because this is all projection. It may or may not come true. Even after the best of due diligence, human errors can happen. And today, sir, it is very difficult for anybody to justify investments as a investment manager. So if things are good, we are all rewarded. If things are bad, people take our name and say, boss, इसने ऐसा कर दिया, उसने वैसा कर दिया, ये हुआ होगा, वो हुआ होगा. So, sir, the space is actually worrying. We have to accept the fact. And today, investing in SME companies, it is like finding diamonds in coal mines. We may find them, but it is very difficult. If you even if you are able to find it, you have to hold it for 1 or 2 years to prove that that was a diamond. And even after proving it is a diamond, you have to find a buyer to sell your diamond to actually realize the price. So if you are living in a village where there is no buyer, I don't think the diamond is of any worth for us. So that is my biggest challenge. As an industry, we should actually talk to stock exchanges and SEBI and ask them to fix a criteria for companies which are going for listing. On the date of listing, whatever criteria is there for migration to main board, that should be the criteria for them to actually migrate to main board. And the criteria should not change post listing, because if some company which is going for listing today, it is a 3 year criteria, the promoter will have everything in place to go for main board as per his plans today. But if that criteria changes after 1 year or 2 years, sir, the investor and the promoter, both rhythm will actually get lost. कि यार मैंने तो ये सोचा नहीं था, हमारी क्या गलती है, सरकार ने क्राइटेरिया चेंज कर दिया. So if the government is actually telling everybody that we are corporate friendly, they have actually changed taxation with respect to all sorts of international taxation, where they are saying that we will not look forward for any sort of a backdated income tax resumes post the Vodafone case, because it has a lot of criticism. So we should also have the same policies applying, that as on the date of listing, we should be aware what will happen to me post 3 years, post 5 years. And if the criteria has to change, it has to change for the companies which are now coming for listing, because they will be aware ki what has to happen. Otherwise, if my whole planning is going to get changed, that practically speaking, last year we had a 2 year migration policy. Now it is 3 year. Last year the net worth was different. This year the net worth is different. Somebody who has worked for 24 months in able to achieve a main board category, if just before applying to मेन बोर्ड 2 months बैक यदि उसको ये शौक लगता है कि भाई अभी ये 3 साल हो गया है और ये जो क्राइटेरिया बोल रहे हैं वो मैं 2 साल के बाद ही अचीव कर पाऊंगा, सर मेरे को एग्जिट कैसे मिलेगा? Unless it becomes eligible for main board, how will I get exit, sir? How will my substantial stake get transmitted? How will the new mutual fund companies will come in? Because mutual funds will only come in case of a main board company. The market cap should be above 1000 crore in most of the cases. How will it happen, sir? How will the next KP Green? How will the next insulation solar will happen? We are only talking about those 5-10 companies which have grown from SME to main board with $1 billion market cap. What about those 98% companies whose investors are actually just shouting and talking to each other? Because the promoter is not at fault, the investor is not at fault. Just because of the policy changes, we are all suffering. So that is my point, sir. I think we are investing in the right direction. But today, the market scenario is not such that it will help us to actually grow and fulfill our dreams. Because unless something is able to get liquidated, it doesn't have any fair value, sir. What is the fair value of a quoted investment, sir? यदि मैं 100 रुपए का शेयर बेचने जाता हूँ, मेरा माल 90 में भी नहीं बिकेगा एवरेज में, तो उसका भाव क्या है सर? 90 है कि 100 है कि 110 है? आई डोंट नो. I rest my case, Pavanji.
Thank you, sir. Very good. I remember we have discussed this liquidity issue. You are absolutely right. And one point which is very, very important, that why I should buy at P at 15 when I'm getting a good companies. I'm just asking one question from you.
Yes,
Do
sir.
you think the SME, which is 3 years now, earlier it was 2 years, if the government reduce this, it will change anything?
Sir, see, it is not about 3 year, 5 year, or 2 year. We are looking forward for a consistent policy, sir. Because now the government policy with respect to SME is actually on a negative mindset, if I say. Because what happens, sir, the government has a mindset कि मेरे को इसको आगे बढ़ाना है कि मेरे को इसको मारना है. किसी चीज को गवर्नमेंट आगे बढ़ाना चाहती है, चाहे सर वो सोलर ऊर्जा हो, चाहे ग्रीन हाइड्रोजन हो, चाहे एसएमई कंपनी की लिस्टिंग इक्विटी पार्टिसिपेशन हो, या एसएमई लोन्स हो. आप लास्ट 4-5 सालों की पॉलिसी देखेंगे सर, गवर्नमेंट वाज इन अ वेरी पॉजिटिव मूड टू एक्चुअली प्रमोट दिस. टुडे what I feel and most of us feel in the stock market is that stock exchanges and SEBI and the government are actually looking forward to actually make this sector a dead sector. उनको एसएमई नहीं चाहिए. जिस तरह से रिजर्व बैंक को कोऑपरेटिव बैंक नहीं चाहिए, उस तरीके से सेबी को एसएमई नहीं चाहिए.
Okay.
अभी वो कोई मुंह खोल के बोलेगा नहीं सर, बट दैट इज द फैक्ट. इफ दे रिड्यूस इट, यस इट विल हेल्प अस. यदि वो ऐसा कर दें कि ये क्राइटेरिया 2 साल 3 साल का नहीं है, आप ये रेवेन्यू या ये टॉप लाइन या ये बॉटम लाइन अचीव कर लो, आप चले जाओ, माइग्रेट हो जाओ. सर आपको 2 साल वेट क्यों करना है? यदि मेरी बैलेंस शीट 1 साल में उतनी बड़ी हो जाती है कि मैं माइग्रेट कर सकता हूँ, तो मैं कर लूंगा. आप कूलिंग पीरियड 3 साल 2 साल 5 साल का मत डालो ना. आप क्राइटेरिया डाल दो कि आप 100
Criteria.
करोड़ का, हाँ 100 करोड़ का नेटवर्थ कर लो जी, 200 करोड़ का टॉप लाइन कर लो, 20 करोड़ का प्रॉफिट कर लो. एग्जिस्टिंग होना चाहिए, 3 साल का एवरेज ये होना चाहिए, उसमें आपका कोर बिजनेस से इतना आना चाहिए. यू फिक्स अ क्राइटेरिया. इफ दैट
Saurabh,
क्राइटेरिया इज गेटिंग फुलफिल्ड, आई थिंक वी आर गुड टू गो.
definitely this point I will, because after the webinar, we are collecting all the suggestions and sending to the respective regulator also, that this is the demand of the industry and this is the issue which we have to take in care. Thank you very much, Saurabh. Your liquidity point, which was there, is and still it is there, and it is really this is happening in the market. You can buy it, but when you are selling, who is the seller? Who is the buyer for this stock? That is absolutely point. So all the players, all the regulator, all the ecosystem has to work out that how to create liquidity in the SME market. If it is happening, valuation may be down, but sometimes what is happening, you are not able to sell shares at all. So 100 rupees shares I have invested, I'm ready to sell at 90 or 80, but some seller should be there. That's a specific point. I think then when the market will mature, this will thing also change.
Sir, I have got one more point. Sorry to
Yeah,
interrupt.
yeah, please.
Sir, with respect to market maker, there is a lot of mischief which is going on because market maker is coming as official market maker, but in SME companies, market maker is actually selling the stake in maybe 1 week time post listing, and then the market maker is not acting as a market maker. He's only taking the fees as a market maker, small fees. But if you look, the market maker is not behaving as a market maker in most of the companies. It is just like a compliance part. So if the market maker would have actually done his duty as a market maker, this situation would have not arisen at all or would have reduced a lot.
So three questions which we can ask regulator: the liquidity, the 3 years to 2 years in place of this, some criteria base, and the market maker consent.
Yes,
Thank
sir.
you. Thank you,
Thank
sir. Thank you. And I'm so grateful, despite of your traveling to Bangalore, you are there with us. So now the last person, Manoj, you are a merchant banker. You are handling with this. You are talking to the various anchor investor. You are talking to the AIF. You are talking. So on the basis of overall discussion which has taken place, what is your experience and what you want to communicate to the promoter, to the regulator, anybody on this?
Thank you, sir. Good afternoon, everyone. Good afternoon, friends. So I think topic we have discussed a lot. I think from the beginning, Shivanshu has given a very detailed discussion on the journey of AIF and the SME and how they are collaborating with each other and how it is beneficial. Pramod sir has very great detail given the journey of an entrepreneur and what is the what should be the focus of the promoter or the businessman entrepreneur, and how what is the right time to go to the market, raise fund, and that is very important suggestions, a very important points which was given. Manik has also discussed all the things, so nothing much, and Saurav has shown his concerns as a investor in the SME market. So yes, these concerns are very much valid concerns. Liquidity concern is there in SME market, and that is also growing day by day in recent time. So post this November, December last year, the situation got a bit difficult for SMEs to shares to have liquidity easily. So that challenge is obviously there, and we feel that. But as per my understanding, as per my observation, the actual role of AIF, which has been very prominent in SME market over last couple of 5-7 years. Before 2017, there was no anchor investor or QIB in any of the SME issues in their first 5 years journey. But when they have started putting money, the whole dynamics of SME market changed, and especially for those companies where the AIFs or other institutional investors were sitting on their cap table before IPO. So that is the critical role where the AIF or the fund comes before listing, at least 1 year before the listing, and they handhold the promoter. They put their money, so it gives credibility to their financials, to their reporting system, to their governance system, and also give a lot of credibility and credence to the investors or new investors who would be putting money into the company. So we have seen in recent time also, when many of the issues were not getting subscribed fully, or were getting difficulty to get subscribed fully, there were issues who were backed by good quality investors beforehand. They were getting a lot of traction, and their post-listing valuation is also very good. So that is the differentiator. When the money, not only the money is coming into the company, but also a hand-holding, institutionalization of the way of working happens due to due to AIFs or other institutional investors coming on the cap table of a company. It makes a lot of difference. So I think that support is very critical for SMEs. There are many thousands of companies, thousands of SMEs who have the potential to grow, and for their growth, it is very important to have right kind of people on to support them. Whenever they need, they bring a lot of value other than the money. So those other values are very important, and if that is coming, it helps in the further growth of the company. And then at the right time they can hit the market, maybe SME or maybe main board. Now many of the companies which were earlier planning to go for SME market are shifting to the main board, and there are many issues which are coming at 100 crore size on main board also. So that is also a good thing, if because there is a huge difference between the liquidity position of SME market and the main board market. If the issue of 100 crore comes on SME, and there will be 3 years period when they can migrate to the main board, whereas alternatively, if directly it goes to the main board, and then one share trading happens every day, so liquidity position drastically changes. So right advice would be very important to the promoters to hit the market, and to maybe to wait for 1 year extra and then hit directly to the main board. That can be one alternate solution to the problem, to the issue highlighted by Saurabh. So so important part is not the money which is coming through funds, but the hand holding, the support, the uh, credibility which comes to the company when an investor, institutional investor like AIF comes on board. So that is critical. Rest of the things I think we have already discussed. So let's discuss the question answer, and that will be better. Yeah.
Thank you. Thank you very much, Manoj. You have given very crisp but very important message and topic. So, friends, everybody has given their point. Now, this is a time of question answer. And I will start questions first with Pramodji, because that is and 2, 3 interlinked question from Pramodji, because you were the uh, company and then now you are investor. Both are there. Earlier you were getting money, now you are giving money. Both way you are doing. And again you are doing this. So can you share a live example where AIF investment helped a company's IPO success, either in valuation, investor trust, or compliance readiness? If the company is in the process, you can, or you don't want to name the company, no problem. You can just give XYZ, anything. So, but in your opinion, something has happened like this?
So I cannot quote the recent example, but I can share my own company case,
Yeah.
though it happened long back, but I think pattern repeats. So what happened with me is happening today also, because nothing has changed as far as raising fund and putting governance in system. And just to share with you, long back when I raised my first fund in the company, we were just a kind of a proprietary company, running a tuition classes for IIT and medical. I was a tutor and doing good, getting large number of students. And when we bring the first investor on board, uh, they contributed a lot in structuring the business, not from what we've been doing, but rather on the corporate side, how we are managing ourselves. And as I said during my sharing also, that within 2 years, so like first round, I raised, and it was a kind, though it was from a family office, but the people who invested were professional. I can share the name also. So Inam invested in my company. Akash Bansali invested in my company. He was my first investor, and they come from a different background because they were merchant banker also and institutional investor also. And it was they have the venture fund. So from their venture fund, they invested in my company with a valuations around 60 crore. And within 8 months, my next investor to whom they anchored, because they believed that already there is an investor on the board, so the company is in place. I raised the second round of funding from Franklin Templeton Private Equity, and my valuation jumped from 50 crore to 300 crore, and that happened within 8 months of time. So, and that these two endorsements helped me to take my company public also going forward, because when I reach out to the potential investor at the time of IPO, when I met various mutual fund during the road shows, uh, existing investor, the cap table helped me a lot, because I was confident that, see, these kinds of people have already invested in me. So you can be rest assured the corporate governance system, reporting, everything is in place. And that helped me to further, enhance my valuation and get the IPO very, very successful. That time, our IPO got subscribed more than 55 times. That was pretty rare in that time. Now, today is a very different scenario. And therefore, I personally, and I'm seeing the same pattern is repeating nowadays also. So when I look at a company, I look at the cap table, I see who all are the investors. And if those investors have a good pedigree, then I believe, okay, things have been taken care pretty well. And I take a call based on that also. Sometimes I don't go into the numbers. I look at only the existing cap table putting and the existing investors. So that's make a lot of difference. Frankly speaking, that's make a lot of difference. Sorry, Pawanji, we are not able to hear you.
Okay. Okay. This is a connected question. Have you ever backed a company through AIF, but later advised not to go for IPO? What went wrong and what signal told you to hold back?
So I don't have a AIF. My QIB is NBFC. So that way we have not backed a company so far. We been in investing companies which are getting ready for IPO. So all the call we have taken for those companies which are 10 months to 12 months, far from the IPO. So when the company is already getting ready, we invest at that stage. So perhaps, I'm not in that situation to answer that question.
Okay.
We actually invest in companies also. Sorry.
Okay. Shivanshu, you have seen some company which you wanted to invest, but you hold back because of some reason. What was the reason? Not without naming the company.
Sir, obviously we have been seeing many IPO companies. So basically, me, Manoj sir, we work in conjunction when it comes to scouting the companies that will be going public in next 12 to 18 months. So one of the companies that we were actively looking at, they were at a smaller scale, but the projections were very aggressive. So we were just giving time to the promoters just to see, how the, semi-annual numbers, so September numbers will turn out. So the projections were very aggressive when it comes to, FY 26, 27. It was showing maybe 100 to 150 year on year growth. And we were pretty skeptical, though the industry was great, not to name any company or industry, though it was looking very compelling story and the valuations were, in reasonable range. So, but in the end, the promoter was not even able to meet the, half yearly projections. So obviously it's about, we try to get, attached to the story that the promoters are telling. But I think at the same time, you should be, wise enough to give it time and, understand the industry in much more depth. So that I think we hold off that investment in the end, even if, the projections were way off. So we hold off that investment in the end. So that was one of our stories.
Okay. Manoj, your experience, or Manik, your experience? Manik, you have any experience on this type where you have told some company not to do, but why?
Sure, sir. I think, I'll also take, you through one of the inspections. So we had a SEBI inspection, regular inspection earlier this year. And where, again, it was a clean inspection, but we learned a lot from what SEBI was also looking for. And eventually, more than, obviously, SEBI gets alarmed whenever investors make a loss. That's one of the alarming factors for SEBI. But if the due diligence is conducted properly, they do not really, I mean, it's end of the day market forces. But eventually, it's a promoter quality and what they're intending to build in. And when I asked SEBI what they actually meant, how can we quantify promoter quality, right? They were looking at a bunch of things, which number one includes related party transactions, right? If there are a lot of related party transactions that have happened, not really reported as related party, disclosures are not done, that's when SEBI gets alarmed. So we adapted the same criteria, what we learned from, interacting with regulator in our approach. And there are some things that we look out for. Number one, we look out for concentration in the top 10 customers and top 10 suppliers. If there are no legitimate reasons for why there is a concentration that exists, right? It raises some sort of a red flag in case those customers or suppliers are not to really work with the company at hand. The business honestly does not exist. So there are similar to concentration, there is concentration of geography where they're supplying. There are a lot of cases where the receivable number, the working capital, does not really match up to what other companies are trading at. So as merchant bankers and as funds, we take a cautious approach that we will not really work with those companies. And I think money saved is money earned end of the day, and this is what we've realized. We've made mistakes. I will also go on record and say that we've made a lot of mistakes. We've made losses, but it's only helped us fine tune our investment thesis and processes. But having said that, end of the day, for us, number one criteria is promoter and the corporate governance, which has to be top notch, especially in case of SMEs. In fact, more so in case of SMEs. Pawan sir, I think you're on mute.
Yeah. Okay. Okay. So, Shivanshu, what is the most overlooked compliance or structuring issue that comes up when companies go for IPO or SME IPO, and how do you prevent it?
Sir, most overlooked compliance issue. Maybe I think Manoj sir would be better if
Manoj, what is your view?
Answer that. But yeah,
Sir, compliance issue as such, sir, that is part of the diligence. Obviously, compliance is subjectively it is objectively it is checks, but the more important part is a subjective thing. What is the intent of the promoter, whether he is ready, his and the organization's mindset is ready for raising fund from the public is very critical, and whether he is just want to get listed and unlock his value, or he want to create value for the investors, that is very, very critical. So the intent is can be derived only with discussions, with the interaction with the team, with the promoter, with the key persons. So those softer part is more important than the objective thing. Obviously, if there is clear red flag that there is a manipulation in the numbers, manipulation in the top line or bottom line, obviously it is a red flag and it will not be anyway taken to the IPO. So those part goes, but even for certain companies which are very good, which are performing well, it may not be suitable. We have rejected a few cases where just because of the intent of the promoters, they were more driven by the market related valuation aspect than actually taking the company to the listing and for the growth path. So if we understand the intent is wrong, then obviously it is a total red flag, no matter how good the company is.
Okay. Pramodji, your experience. What is the biggest mindset shift promoter must make when moving from private AIF-backed company to public SME company? So
I believe that the biggest mindset shift which promoter should have, that whether you are ready to share your wealth with others or not.
okay.
That's a one thing. So if you are ready to share your wealth with your investors, and you believe that investors are your partner in business, then perhaps you are ready for going public. So that's a one thing which is very, very important for a promoter to shift. And because once you start thinking that way, then you will start thinking about the company. You will thinking about creating value for yourself and for your investors. And then everything will put in place, like related party transactions, cash flows, disclosures, everything will fall in place. So as soon as the promoter start believing that I'm creating value for my shareholders and for myself, things fall in place. But if we think that I'm creating value for me and my family, and raising fund from the investors, then everything fall out of the place and become messy.
Very rightly said. Very rightly
Okay.
said.
Do you become more disciplined or more casual when you get fund? This is what you have seen with the promoter.
Few like majority of promoters who have the mindset which I just shared become pretty disciplined once they have investor on board. Many people take it granted. Once the money is in their bank account, they do not follow the corporate governance structures. Specifically, I've seen with SME is the most like Manik shared the related party transactions, and the intent behind the related party transaction is very important. Sometimes it is part of the business. You
Right.
need to go for related party transaction, but sometimes it is just managing fund from one X business to the Y business and doing all those things. So that's create a lot of trouble in the business, and that's something which is very very serious. So personally, I believe if you have the mindset of sharing wealth, creating value, you you start following proper governance once you have investor on board, and then that's all. If you don't have the mindset, then you do whatever you want to do.
Manik, have you experienced somebody who has not listened to advice and then it is back?
And Pavanji, just to interrupt you, I will share without naming one of the case which has done who actually messed up the entire business. If that company would have followed the corporate governance, perhaps today would be listed on a stock exchange with not less than 5,000 crore market cap. That's my belief. I've seen that company very closely, though I'm not the investor in that company, but I've seen that company and the promoter. But promoter did everything wrong.
Yes.
He got the best investor on the board, best business in place, but just because the promoter was crazy to go beyond his business and enter into the real estate and started moving money out of the business to the real estate and get messed up, kill the entire business.
Yes,
And that's a
absolutely.
live example I've seen.
Yes, absolutely right. So, Manik, can you share where
Yes.
it backfired? Where they have not accept the advice and then backfired.
Sure. So sometimes not like all my advisors would be correct, but we all also know of the company. Someone who's been in the market know of the company that Pramodji is also mentioning about just now. But there, I have seen a case where I was deeply involved. I helped them raise private equity capital. However, and this is again without obviously naming the company. There was a company which was leader in the entire EV space, one of the top 5 companies. We saw that in that case, they were not just top 5, they were in fact once upon a time number 1 in the EV space. The promoter was also going for a great promoter, by the way, but also seeking a higher valuation number that the market was giving. Maybe it was a negotiation tactic, maybe it was not what the promoter themselves valued at. We had marquee funds looking at this company, but the promoter wanted to get the tag of a unicorn. And while they had term sheet of about 4,000 crore enterprise value signed, they were seeking to get the tag of unicorn. In the interim, obviously, this was during COVID, and they scaled during COVID, but there were some fame to issues because of which they were named as one of the companies that received subsidy but was not eligible for subsidy, and they had to take this one-time loss. Without getting into, again, specific, the existing term sheet, the investor also withdrew. Some of their dealers withdrew. And it was a domino effect because of which the company is now trading at maybe in the secondary market, maybe at 90% discount to what they were initially seeking. So again, takes us back to what Pramodji in his initial point mentioned, right?
Okay.
Take the money when it's available, not when you need it.
Okay. So last question, because we have to close this. Pramodji, what metrics do AIF use to decide IPO readiness, not just financial, but team and credibility wise? Or I can pose it like this. When a company is deciding for IPO, what readiness they want, though you have given the whole answer. Okay. But even then, not just financial, but team and credibility wise. These are two things which I want to ask your focus. You have given the financial aspects and other aspects, but what about the team and credibility?
See, when you go for public, obviously, either you are raising fund for growth, and for growth, is the team is in place or not? That's very important, because once you get money and post getting money, if you plan to build the team, then it will delay the entire growth process. There is already lag. Like once you get the money, it takes some time to put the invest the money to get the growth in the company. So having a good team which can execute bigger vision with the kind of capital you get from the market is very important when you are going to public. If the team is not in place, then perhaps you will misutilize the fund, or you will not able to use the fund in a better way to get the desired return. So team is very, very important, and team not for the running the current business, but with the increased capital, whatever plan you have, you should have the team in place.
Okay.
That's what I would like to hit, apart from credibility, system, procedures, governance, etc.
Okay, okay. So, friends, thank you very much. We have covered, uh, I think, most of the aspects. What is this AIF linking with this, the market disabilities, the market improvement, and the promoters things? Manik, Shivanshu, Manoj, and Saurabh has given, but the Pramod ji has a both experience, so he has shared as an investor, as a company. So now I think it is a very clear message to all companies that you build business, not build your PPT. You build your credibility, not just a narrative. A narrative is required, but there should be some substance. So always quality is overruling the numbers and quantity, because overall you have to do something great. You give something to investor, because sharing wealth is giving back to the investor, and then investor return you money in plenty and anytime when you want. But when you want to kill the hen and take out, thinking this that all eggs are mine, then you are just spoiling yours also, as well as the others companies also. Because sometime when market is going bad, like one example you have given for this education center. Now this edutech companies, if they are doing bad, you must have faced the problem when you are going for career point program, and the public issue everybody was seeing from the same eyes. So that is also creating. So with this, I thanks everyone, but as a ritual, we just conclude by taking views from everyone on this particular topic. Shivanshu, I will start with you. 30 seconds so we can understand this part.
Sure, sure. I think, sir, pretty fruitful. I think we discussed both the aspects, the positives, and what things need to improve in the whole ecosystem. I think the major concern has been liquidity, and I think given that we have discussed all of it, would love to with Pawan sir, Manoj sir, and everyone else involved, would love to even speak up at larger forum to pick these issues up, and I think these are easily solvable as well. But I love to see, I've been a pro India for 2047, and I think we are at just the right path. So lovely discussing all of these pointers with you all. Thank you, guys.
Okay, Manoj.
Sir, I think broadly we all agree that AIF or alternate or institutions have very good, very important role to play for the growth of MSME. It is not only about the SME IPOs or anchor. It is also the handholding, which or the alternate support route of fund than the loans to build them. And we all we understand that SMEs are very important for the growth of the country. So they, if they are good, business is good, then they need support, and that support comes very well from the pool of fund, which is AIF. So it is
Okay.
very important.
Okay, Manik.
So 3 points quickly in 10 seconds each. One, for the companies, this is probably the golden time to raise. Obviously, there are cyclicalities. upsides and downsides, but great time to raise money, especially with institutional capital such as AIFs coming in. For AIFs or budding fund managers, it's a great sector. The more the merrier. The pie is very, very big. To actually look at some of these companies pre-IPO, at the time of IPO, and post-IPO. And lastly, for investors looking to invest in AIFs, it is patient money, but the return risk reward ratio is actually very, very high. So great asset class to explore in terms of investment.
Okay. So last word, Pramodji, from your side, advice to everyone.
So my advice to the promoters and the ambitious promoters that you need support not only in terms of money but also in terms of guidance, and therefore taking money from AIF kind of institutions is a good way to grow your business and create wealth not only for yourself but your investors also.
Thank you very much. Thank you, Pramodji. And I will request Shivanshu that take Pramodji and his type of promoter into one frame and discuss and advise to people, because their growth story is a learning for others.
Absolutely, sir.
The
Absolutely.
story of other people is not important. The story of those we are seeing his success today, but how he has success in the market in this area, people are not seeing that his journey and his struggle which he has taken place. So, in my opinion, the struggle is not Ramchandji's struggle that they were barefoot, they were going. The struggle is your mindset that
Yeah.
I will earn money for myself, I earn money for investor. So that struggle has to be sharing wealth with the public, the investor. That is one biggest mindset that you have to change. You have to be truthful. You have to transparent. You have to give the what is the correct thing. Even sometimes you are wrong. You have to communicate. Investor can excuse you for your this mistake. If you are truthful and say simultaneously you are saying that I am working for this to correct it, they will give it. There are so many turnaround story we have seen in the market. Only thing is, only turnaround story has taken place, Pramodji, because promoter was truthful. He was facing some bad period, but because of bad period, he has struggled back and come back, and the investor is ready to help him because he
Yeah.
was truthful every time. So with this thing, we are closing this session, and I'm grateful to everyone, all participants, all my panelists who has come, and Saurabh also in absent. He was traveling, but he has joined and giving a very important clue to tell SEBI and the regulator and the stock exchange. With this, I'm closing the session. Thank you very much.
Thank you.
Friends, this journey of knowledge sharing is continue. And as you are aware that every Friday, 4 to 6, we are doing. So I have announced in the beginning the program on valuation, but I just now during the program, I got that labor code has notified by the government. So next program on 28th, we are doing program on labor code. And we are inviting the best of the best faculty of the India who has expertise in labor law and future of labor law. It will take place. So till then, goodbye.